Market Musings podcast with Fairbairn and Russell. Well, welcome back onto the Market Musings podcast, where our guest today, Alex Walker, the CEO of East Star Resources, is joining us. The first time that we're speaking to you, Alex. Thank you very much for joining us. How are you?
Very well, thank you, gentlemen. Thank you for having me on today.
It's good to be talking. I know we did our first interview on Stockbox just the other week. Well, actually, that's actually incorrect because I looked back and I did realise that we did speak nearly 2 years ago, which does take me back. I'm not sure where that came about, but you were on an audio-only interview 2 years ago. But yes, the first video interview of recent times was last week, and the first time on the podcast. Hopefully, we can get to know you a little bit more.
And a lot's happened since then, that's for sure.
Indeed, yeah. Well, of course, Kenny's joining us as well, co-host of the podcast.
Yep, great to have Alex, and yeah, it's nice to have. Obviously, I'm in Scotland, Mark's in Holland, and I believe you're in Kazakhstan. That's your base now.
Yeah, absolutely. And I tell you what, it's quite a nice day today, as you were mentioning. It is up in Scotland as well. I've got a view of the mountains right next to Almaty from my window currently, and it's absolutely stunning.
So what we do in this podcast, we allow you to sort of give us a sort of plotted history of yourself, a chance for you to tell us a bit about yourself, because ultimately you can have the best projects in the world, but if you don't have the right people behind these projects, then it's never going to work. So we're great believers that people invest in people. And so I'm going to open the floor up to you, Alex, and just go back as far as you want and just tell us your journey, really. And we'll jump in with questions at an appropriate time.
Goodness, Kenny, you're asking, you're giving the floor to an ex-stockbroker who I laugh. I once did my company directors course in Australia, Australian Institute of Company Directors, and I was told I was acting as the CEO in my group, and the rest of the group was the board. And we had to make a pitch, and I basically talked at them until the time was up. And I got given it afterwards that was the CEO sort of taking advantage of the board, because it was an hour or whatever had been set for the board meeting. And a strong chairman should have jumped in and wrangled the CEO before, but instead he managed to keep control of the whole thing, which meant he got to do what he wanted. So, yeah, as I say, giving the microphone to me can be a little bit dangerous, but I'll try and keep it precise. Well, why don't I just start in sort of Western Australia? The start of my career is probably the best. So before that, not particularly interesting. I was born in the UK and emigrated to Australia when I was 2, so I've managed to wrangle myself a couple of passports, which is quite handy. And grew up in a small town in sort of southwestern Australia, south of Perth. Moving sort of into my early career I'd started in capital markets in about June 2007. For a lot of listeners, we'll probably remember those heady days. I managed to just catch the end of quite an extraordinary boom, markets boom in general, but certainly a mining boom, which was enough for me to borrow $30,000 from the bank, pretend it was a car, and chuck it into the stock market. And I turned it into about $90,000 in 2 months. And then I promptly turned it into $10,000 about 3 months after that. And spent the next couple of years sort of borrowing, I should say, trading my way out of that position and out of that debt, thanks to sort of the crash that came at the very end of sort of 2007, start of 2008. And I think what that taught me pretty early on in my career was a very heavy, difficult lesson about risk. And so, I've that sits with me quite strongly, and I take that through, with most things that I do. And, I think with East Star Resources that, our portfolio kind of resembles that, because I know that exploration is inherently difficult. You can have fantastic prospects, but for any number of reasons, and it doesn't have to be geological or metallurgical or anything. There could be any number of reasons why a project doesn't come to fruition. And I think spreading your risk a little bit across a portfolio is a very, very sensible approach. And that's basically how that company started. So I stayed in capital markets in Perth until about 2013, working for a company called Patterson Securities, which is now part of Canaccord. Quite a significant brand in metals and mining globally today. Mm-hmm. I then handed my notice in with the thought that I wanted to go to Europe and do something similar. My partner at the time had just finished her PhD, so we were sort of looking to escape. Perth felt a little bit small pondy at the time, certainly for people in their 20s. And then Patterson's told me that I should go and run an office for them in London. So it wasn't what I'd originally set out to do, but it was a really great opportunity for me to sort of find my feet and see the bigger financial world of London. And so I did that. Moved to London in 2013 and spent I guess about 7 years in capital markets there, doing various things. I should say that being in Perth was an education for so many different reasons. When you go through a mining boom, when you go through any boom, it brings out everybody. All types of people get interested when money's being made fast, and it became. I got it wrong, I should say, at the time. I assumed that just about everybody I met was a bit dodgy. You'd have people come in and present, and I had a pretty distinct lack of knowledge on mining at the time, albeit that's all you do when you're in capital markets in Perth. Mining exploration is 95% of what you're interested in. But it became quite clear, you'd watch people present, you'd watch people, with pretty irregular backgrounds, become CEOs of companies. And, the more you started to learn, the more you realized that, this company this person was receiving, rent on their apartment from 4 different companies, for instance, and things like that. So it was less about, it felt to me as a novice at the time, less about exploration success and more about mining the markets, which didn't sit particularly right with me. So I thought I needed to educate myself a lot more to basically stop people pulling the wool over my eyes. And so I did a Master's of Mineral Economics, which doesn't make you a geologist or a mining engineer or anything like that by any stretch of the imagination, but does give you a bit of a flavour and the vocabulary, and I think importantly gives you a cohort, gives you a network as well of people to draw upon. And I'm in WhatsApp groups with people from that cohort today, and some are running private equity funds, some are very senior in mining firms around the globe, and various levels of everyone's been advancing quite well in their careers. And it's a very, very handy sort of group of people to rely on for information, for due diligence, for sense checks on things, and so on. So that worked quite well. I don't think it made me any friends as a broker, to be honest, because I used to ask quite irritating questions. There was always a broker that was bringing in a company that wanted to promote it, and then there was this young guy on the floor who'd be asking about throughput and head grades and how they got certain recoveries and so on, for people that quite frankly didn't want to be asked that question.
That was something I was going to ask. I mean, what was your, obviously quite a long career in various brokerages, Alex. And did you start on the floor? Was that your first entry and just sort of work your way up, or
I actually
a fast track route in?
Yeah, I actually spent the last 6 months of my degree in France. So I was a bit of I missed out on the graduate recruitment things. I'd always wanted to do a an overseas stint. And time again, I probably would have gone for a year, but nonetheless, I finally got my act together in the last 6 months of my 4-year degree. So my degree was international business and politics. And so I did my last 6 months in Dijon and came back to Perth, and was basically looking for a job. And one of my friends from university was working for an online platform, which was Westpac Online, which I got to say was basically a call center. Now, I'm someone who worked on the checkout in Woolworths at the start of my university career, so I wasn't particularly precious, but nonetheless I was ambitious, so I knew I didn't want to stay there for particularly long. I did end up on the complaints desk for Westpac, which I guess is probably the job that you give to someone with a fairly mild mannerism. And I used to laugh because people would show me the forums, the chat forums, and they'd be like, "Oh, the trading platform's gone down again. Just give Alex a call or ask for Alex on the complaints desk and he'll give you 3 free trades." And so I thought, God, I'm being named here. It's time to go. So that was my first 12 months. And then after that, I moved to what we call a full service firm as sort of a dealer's assistant with a more senior broker on the floor. And that chap actually, I mean, he was incredibly well networked. Again, the Perth investment banking community is pretty incestuous, and everyone wears several hats. And he was also on the board of a company called Barminco, which was one of the biggest underground drilling contractors at the time. Hugely successful company. So that gave me all kinds of sort of knowledge and introductions and things like that, which was incredibly helpful for really just understanding the lay of the land. How things work, who's who. And so on. So, that along with the formal education was, I think put me in fairly good stead, at least from a level-headed approach to investing perspective. That was that part. During that time, I was also in the Army Reserve, so I joined that pretty much first year university, and I went through Royal Military College, Duntroon, part-time. And I say part-time, it was nearly a third of the year I'd spend doing courses. It was every single university break I'd be on a 2-week or a 6-week course, and probably two weekends a month. So it was a part-time job, but certainly required quite a lot of commitment. And I think is probably also one of the things that gave me the grit, which is a pretty becoming more common term of phrase at the moment in a world of entrepreneurs that really now's timing, all these kinds of things are really important, but grit. And you mentioned, Kenny, want to talk about failures, and it's failures, and it's weeks upon weeks of being yelled at, little sleep, working in a very high achieving peer group environment that I think helps build that kind of character, and has probably put me in relatively good stead to pick up my family of 2 young children and a wife and say, "Hey, we're moving to Kazakhstan. I've got a great idea."
Life's a journey, isn't it? Sometimes you've just got to do something and then see how it pans out, and just sit and think about it and not do it. It's my attitude is life's not a dress rehearsal, so I'd just rather go for it and see how it pans out, and then you can say you've at least tried it. It's life's too short. I mean, I'm over 50 now, and you're like, there's so many things. I wouldn't change anything, but there's so many things and opportunities that I'd done sooner that I just didn't have the drive and the motivation for. But for some reason, maybe in my older years, it seems to have came back now. So I mean, I'm up for anything. I know that sounds terrible, but you know what I mean. In the world of investing or opportunities, I'll take on any challenge, even if I've got to wing it to a certain degree as well. Sometimes there's more enjoyment when you're presented with an opportunity or a project and you've got to try and wing it. Because you soon realise that people round about you are actually winging it as well. It's
a constant refrain, isn't it? The looking back aspect, and I mean, for people that deal in capital markets, like you guys, like me, in essence, your decisions are very easily recordable. I mean, accountable, and you can see that you didn't buy at the bottom and you didn't sell at the top and you didn't participate in this bull run, or they're very, very tangible. So that the key is to worry about that less, and but still take on the lessons without, as you say, wearing them as a regret. And it's not. I don't do that perfectly by any stretch of the imagination. But you have to remind yourself that that's the purpose of being in this position. When I was at Patterson's, I was on 100% commission from a very early stage. So there was no safety net in your earnings or anything like that. And so that sort of helped also teach that risk profile. It taught me about saving. It taught me about diversification and so on. I mean, I had a good education, so it wasn't like I really had to learn it. But a good education sometimes doesn't help you, or more often than not, doesn't help you with the real life lessons of these things.
Yeah, definitely, definitely. But right, so I can interrupted you when you just arrived in the UK, so I'll let you continue.
Oh, sure. Yeah, so the UK was fun. So I moved there with my partner with Patterson's. Again, I mean, 2013 was a pretty horrible year. It's interesting talking about horrible years. I mean, it feels like 2023 will very much be one of those in everyone's record books. Again, in terms of capital markets, so I probably don't need to delve into geopolitics now or today, but it's those are ultimately the times when the most money gets made. And I was laughing. I went around trying to raise money. I think it must have been about 2014, 15 for Sol Gold. And they had, Sol Gold, for those that know it, and I'm sure plenty do, have quite a substantial porphyry discovery in Ecuador. And I was sort of walking around with Nick Mather trying to raise capital, and it was near impossible. And we were looking at this thinking, and I've got several of these stories, looking at this thinking, oh my God, this has got to be, one of the best drill intersections I've seen in God knows how long. I don't understand why people won't fund it. And the concept was that, oh, it's a big porphyry, and you come to me for $10 million today, but you'll be back next week for another 10 million. And they weren't wrong. Porphyries are expensive things to drill. There's no doubt about that. But there was such a strong part of you that says, yeah, but that's the point. The point is that you drill and hopefully by spending money, you're creating value. And Sol Gold was 1.5p during that visit, and I was unsuccessful. We went to all of the right institutions, all the right people, all the normal check writers, and sort of no one would come to the table. And about 6 months later, they ended up getting about, from memory, maybe $35 million out of Canada, and within 12 months they were 25p. So people would have made 15 times their money, but that was just very, very telling of what happens in these markets. These are horrible markets, but it's when the biggest gains are often made. And when you're in mining, when you're in small caps, you actually spend a huge percentage of your career in these markets, right?
Yep.
So you stick to it. You apply your spending very sensibly, and you make sure money goes into the ground, and you make sure that the work you do will put you in the position to be that company that's 15 times higher in share price, 12 months later when things recover. So yeah, look, that's one of quite a few stories I guess I've got from my London early London days. But 7 years in London, a few iterations, I became quite good friends with a lot of the, investing community, the fund managers and so on. And one of those people who became, quite a good buddy was David Minchin, which a lot of people, I guess, might know as the CEO of Helium One, now ex-CEO of Helium One,
Yep.
when they kicked off. And so we sort of we'd always chew the fat. I'd call David, who was working for a private equity fund that managed about sort of 450 odd million with an Africa focus. And, the conversation was always pretty good. It was like, Dave, I want to talk to you about this company. Look, can you take a meeting for me? It's a bit of a favor. I don't, I'm not too enthusiastic about it, but nonetheless, this is what it looks like. And Dave would inherently agree, or I'd say, look, actually, this one has got serious legs. I'm really impressed by it, and so on. And a couple of those ones, went through to the point of their investment committee as well. And so I think Dave and I hit it off because of that, that honest approach to things and understanding of intuition and analysis about the quality of company and the quality of people. And so we sort of said, we'd try and work together at some stage. And then eventually we started this company, in hindsight, quite poorly named because it's difficult to say, but Scandi Vanadium, which was vanadium in Scandinavia, in southern Sweden. Often people would ask, would say, that's great, I'm really into scandium. We're like, well, sorry, but we're actually vanadium. So yeah, we probably should have thought about that one a little bit harder. So I think that's another lesson learned, which I'd like to think that we fixed with East Star. But so we started that company together. Basically, we literally just put in our own money and pegged ground in southern Sweden. The concept was a sedimentary hosted vanadium project, and by all accounts looked like one of, if not the biggest vanadium deposit in the world. I'm drawing back now. I haven't reviewed it for quite a few years, but I think we had 3 historical drill holes, ultimately about 26 kilometers apart, all with incredibly similar intersections of vanadium and grade, and one of those had outcrop in the middle. So we travelled there. We sort of David mapped the riverbed. I was kind of his field hand. I'd help collect the rocks and learn a little bit of what we're doing, carry the XRF and so on, and watch him do his job. But nonetheless, it was very educational for me, and I really enjoyed being in the field. And just learning that part, because certainly when it came around to my real part of the business, which was raising money and talking to people about it and so on, unless you're there and you're living it and you know it and you understand, the rocks, you can't talk about them in the same manner. And so I find that incredibly helpful, knowing, if I can paint a picture because I was there and I've walked the ground and I've spent the time. So so that was great, actually. I mean, it was great to start the company. We listed it on the Australian Stock Exchange. We pegged the ground when vanadium was about $4. It listed when vanadium was $27, and then it spent the next 12 months going back to $4. So you could argue that our timing was good from a listing perspective, but as in getting it away, but certainly wasn't so good from a share price performance after that fact. And the company had a few other issues. I think the capital structure wasn't particularly good. There were people who wanted out because it was an RTO very early on, and it had been unlisted for a year and a half. The other problems were we had permitting issues. We had it certainly felt like a very supportive local population, but there was a very, very loud minority. And they were loud in the fact that the politicians often thought that they represented the whole population. But David and I would stay in Airbnbs on site all the time and speak to people about who we were and what we were trying to do. And this was the battery revolution. This was us getting green energy materials from a jurisdiction that has low clean power costs and the demand for these sorts of materials in their steel plants and so on. It makes perfect sense in these jurisdictions to be more insular in the entire supply chain for the metals. And but if you speak to a rich person and say we're exploring for a metal here. All they can think about is a giant coal mine in Germany, and it's a very emotional concept, and we thought we went about it incredibly well. Talked about rolling reclamation and very clean processing, which was our absolute goal. But nonetheless, it's hard to get some people off that pedestal, and we struggled to do that. And because of the laws in Sweden, they managed to hold up lots of our exploration for years. So we only got to drill 2% of our license. And funnily enough, that 2% of our license had an in situ vanadium deposit, lower grade than the other historical work that was done. And it was still over £1 billion of vanadium. So, it just goes to show that probably is the world's biggest vanadium deposit. Geologically, we were correct, but the stars didn't align to take that one forward. And to be fair, we would have pushed it, I think, a lot harder. We would have kept committing to it a lot harder, despite the local headwinds, because I don't think that's the sort of thing that should stop a project which you can demonstrate scientifically can be done, without any of the major, or even minor ESG disruptions, which need to be taken into consideration all the time, right from the start of a project these days. And quite rightfully so. But the other issue we had was metallurgy was a little bit difficult. So, we didn't quite crack the code on that. We got reasonable grades, but probably not the sort of grades that would make an economic project at that $5, $6, $7 a pound. So it's not to say that it can't be cracked at some point in time for anyone who's listening and wants the world's biggest vanadium deposit, but a little bit more time and effort needs to be spent. So there were two sort of major headwinds, and that was actually principally the reason that we started looking for additional projects, in other jurisdictions. So there was lots of reasons to come to Kazakhstan. From a macro perspective. But between David and I, we'd invested in and worked with companies all across jurisdictions all across the globe. The big obvious mining jurisdictions of Canada and Australia, which are fantastic, still have their own headwinds and their own expenses and so on. But also we didn't really feel like we had a point of difference there all that much. The local aspect of things is a really good way to to sort of know that you're onto the right area, because someone's usually been studying that area for 20 years and you can use that insight and that knowledge. So we didn't feel like we had that point of difference. Africa was at the time going through a lot of resource nationalization and still obviously does to and fro in that sphere from time to time. And Eastern Europe and Central Asia just appeared to be gradually climbing in interest in both, the Fraser Institute's investment index. There was a couple of big sort of success cases. Timok was one with what was the name of it? Reservoir, I think it was. That was a multi-billion-dollar takeover, and you had on the ASX had Adriatic, which was a fantastic success, incredibly high grade mine. It was a historical mine that they went back and re-drilled, and the share price was doing fantastically well. And Rio Tinto was looking at lithium and so on. And so, we got quite excited about this part of the world that it was untapped. If you can't quite say completely untapped, but certainly from a Western investor's perspective, it felt relatively so. We actually had a peer. I don't know if we could have considered them a peer, but they were also in sedimentary hosted vanadium in ferroalloy, who obviously I've, since moving to Kazakhstan, I've got to know a lot better. And they had an astronomical market capitalization compared to ours. And so one of the original thoughts was, well, we really like Kazakhstan as a jurisdiction. Maybe we can go and find, a continuation of their deposit along trend where, there's folds in the mineralized horizon that give you the density for another deposit. So we came here specifically looking for that. Talcan Samaruk, the Sovereign Wealth Fund, we'd connected with in London, and they assisted just in logistics and things like that, which was very helpful. And we spent a few days wandering around the most gorgeous mountains. Again, me playing field hand to David. Watching him do his job, and ultimately we didn't find it. I mean, we did find it, but we didn't. Geologically, it didn't offer the opportunity that we were hoping for. Mapping at surface just basically showed, I guess, not enough overlapping and not wide enough. Potentially mineralized horizons for there to be an economic deposit. So, that idea stopped, but then we spent a few days in the office with Talcan Samaruk, and we looked through their database of projects, and we just got really excited. I mean, it was just, absolutely phenomenal. And so we thought, well, this is a jurisdiction we need to spend some time in. So we came back another 5 times that year, met with dozens of private project holders, looked at Talcan's portfolios again, did a number of site visits, went through negotiations on a couple of assets to farm in to some, so got an understanding of how business was done in Kazakhstan, or a lack of understanding, because ultimately most of those fell over. Just about everything fell over. So trying to understand, and I think even today I've probably got a much better handle on it. But how you close a deal here is very different to call them asset liquid markets like Australia, where people horse trade assets for shares and things like that all the time. It's a lot less known here. So we would have reviewed over 150 projects, and ultimately we settled on the concept of pegging ground. But at the time, COVID had started, so this was throughout sort of 2019, all of those site visits. In fact, our last site visit was in February of 2020. And really interestingly, we landed in Almaty after Astana, which is the capital. We landed in Almaty, which is the old capital and where I live today. And people were taking our temperature as we got off the plane. And we were sort of scratching our heads going, what, this is a bit weird. You don't normally see this. And you start doing a bit of Googling, and this whole concept of COVID was starting to come up. We didn't get sick, so hopefully we weren't the people that brought it back to the UK. So we certainly didn't get sick at that point in time. I did get sick later, so I'm not immune to it. So please, no one blame us if anyone is drawing those conclusions. But yeah, nonetheless, the timing for that was obviously very interesting. And being an ASX listed company, a lot of investors had said to us, look, you need to focus on Australia. I mean, Kazakhstan sounds very interesting, but you can't even go there now. So this was obviously a few months later into early to mid 2020. So David and I, look, we didn't really want to do Australia. I mean, we kind of knew it was the right thing to do for shareholders. We understood and appreciated that. But we didn't want to be the people running that. In fact, I was offered, but because I'd moved back to Australia for COVID. Sorry, I'm jumping around a lot here, but my wife and I had our second child due in June in central London. Our first was at Chelsea and Westminster, and God knows, all the rhetoric coming through. We did not want to be having a baby at the hospital at that time, just with no support, no family, all that kind of stuff. The information that was coming through was quite scary. So we managed to jump on a plane quite quickly, and we packed up our apartment that we'd lived in for 7 years in about 3 days, and hot-footed back to Perth. And so anyway, we were in Perth. We ended up doing a deal with an ASX entity, and then spent some time doing a soft handover, serving out long notice periods, helping manage the Vanadium portfolio, helping promote the West Australian one. The share price went up about 5-fold at its peak for that asset. So everybody managed. It was definitely the right thing to do at the time. All investors, even from the original IPO at 2.7, managed to make a reasonable return on investment. And David and I left. I wanted to really continue with the Kazakhstan concept, and David was trying to figure out what he wanted to do, and was obviously approached about Helium One, and the rest is history there. So he moved on to do that, and I moved on, working for free for a year to turn the Kazakhstan concept into a reality. So yeah, that was probably quite a long transition of London through to Kazakhstan. But yeah, nonetheless, when that all started to demonstrate it had legs, that's when I started speaking to my wife about potentially moving here. We were interested in doing something, what we considered exciting anyway. And absolute credit to her. I mean, I'd been here 5 or 6 times. I knew how lovely Almaty was. And my wife moved, the first time she'd ever set foot in the country was with all of our bags and 2 kids in tow. So that was an absolute credit to her, and she settled in incredibly well.
She's a definite keeper. So she is, Alex.
Absolutely, mate. Yeah, absolutely.
Yeah. No,
I hope she's listening.
I don't think people appreciate how big Kazakhstan is either. I mean, of all the kind of countries that end in stan, it's probably the biggest, I would imagine. I mean, I don't know, what sort of comparable size. I mean, you look at it and it must be like, half the size of the USA or something. I mean, I'm just guessing. I mean, it's huge.
I've not done. I think it's 2.65-ish million square kilometers. And there's a great website. In the early days, I did a couple of LinkedIn posts of it, but there's a great website where you can kind of pick up a country and overlay it, because I'm sure everyone knows these days that the map that you see and you grow up with in school is not particularly representative. It disproportionately represents, in terms of size, Europe, America, and so on, and the southern and many other countries aren't represented as well. So if you pick up Kazakhstan and you put it on Europe, it covers England and it goes all the way to West. It's as big as Western Europe. And so and it's a very similar size to that fact as Western Australia. I think Western Australia is 2.7 million square kilometres. So the two are very, very similar in size, and in so many other ways, geologically speaking, and in terms of discoveries and discoveries undercover. And I say, Kazakhstan is Western Australia in the 1970s, and it's meant endearingly, and it's meant geologically, because, Western Australia's had the benefit of now 40, 50 years of intense investment, with so many, exploration dollars being spent in the ground there, modern day geophysics. I mean, really looking undercover requires not just the modern day geophysics. I mean, this geophysics was invented in the 60s, but the processing power to interpret it properly has really only came into fruition properly in maybe the 80s and 90s. And obviously today it's considerably bigger than that as well, considerably greater. And then different interpretations. The places like the Centre for Exploration Targeting at UWA in Australia, and a fantastic example. The work that they do has helped uncover several deposits in Western Australia and in other places. And sometimes it's just a new, geological way of thinking. So it makes perfect sense taking that technology, taking those geological brains, and applying them to a place that hasn't had a major discovery, or even really many minor ones, in about more than 50 years. And just about every single deposit in Kazakhstan was outcropping. Our Rudny-Altai belt is a perfect example of that. 70% of the belt's undercover. You're supposed to VMS belts have quite repetitive spatial frequency. So it's obviously it's not perfect, but if you've got a deposit every 5 kilometers or a deposit every 3 kilometers or wherever it is, depending on that part of the belt. And where we are, you've got one deposit, and then you've got cover for 45 kilometers where there's absolutely nothing. And then you've got 3 deposits and then you've got nothing for another 30 kilometers, which is where our licenses are. And then you've got another 5 deposits. And, the 30 kilometers where we are is undercover. I mean, it's not, you don't have to be a geological genius to know that there's probably something hidden under there. You do need to have that level of expertise to find it. 30 Ks is a long bit of strike to know where to put the drill hole. But nonetheless, I mean, just pure statistically, there's got to be these opportunities, and it's why you've got Rio Tinto here. It's why you've got Fortescue now investing in a big way. First Quantum's just come. Barrick said they're setting up an office. All of these groups were waiting for the mineral law to change, and then they were waiting to see it tested. So the mineral law changed at the end of 2018. You had less than a year of testing it before COVID hit, where very little could get done. A couple of years post-COVID, and now they're jumping in. And everyone's getting quite excited, because in these porphyry belts, you've got a 2 billion ton copper deposit. It's principally it's an open pit in the lowest cost quartile production in the world, and Kazakhstan is probably the cheapest place in the world to dig a hole. And there's one of them. There's one deposit, and these belts are huge. And so there's not obviously one deposit there. There's going to be dozens of deposits statistically, but the other ones that the only ones that are being mined are the ones that were really obvious. So people are starting to come here now to find the slightly less obvious ones, and it's not going to be too long, and I certainly hope that we'll be one of them, that these success stories will start to come out.
Yeah. I mean, just obviously, believe it or not, we've been speaking for 45 minutes already. I mean, I think it'd be quite good.
I warned you.
Yeah. I think it'd be quite good just to give us almost like a helicopter view of the assets.
Sure. Well, I guess principally I've spoken about the VMS, and that's certainly leading the portfolio. I mean, there's no doubt that every single investor in the world should be thinking very long and hard about copper exposure in their portfolio. If you miss uranium, or it's potentially still going, if you miss lithium, don't miss copper. It's easier from the perspective of marketing and so on, and it's incredibly obvious. There's a structural shortfall that's going to hit, depending on who you ask, but 2027, it's deposits take 10, 15, 20 years to find and grow and permit and replace. It's just going to be insane. So anyway, that's principally our focus, and it makes a lot of sense. So with that, we've got our short, medium, and long-term targets. Short term being ones that we have quite a substantial amount of data on, and the real potential to turn into, basically we are drilling or we will be drilling soon. So that's targets like Vakuba, which had 42,000 meters of drilling in it. We've got a JORC exploration target. Now the process over the next 12 months will hopefully be to convert it to a JORC resource. There's other targets on the license that have less data but look similar or interesting, or from surface, like Telovskoy, where there's big rock chip samples of massive sulfides at surface. So there's no doubt there's something interesting there. Old mine shafts and so on, we need to try and understand. Then we've got our medium-term targets, which are, we did an EM survey that generated targets across our 800 square kilometres. Since then we've done mapping, confirmed alteration at surface, confirmed the structures are the ones we want to be in. We're doing we'll be doing ICP analysis on rock chips and so on to get the fingerprinting correct to ensure that we're in the right horizon, and then hopefully they'll be drill ready next year. And then the long-term target is what else is there on the belt? I mentioned that we've got 30 kilometres, but there's 250 kilometres of potential strike that that we'd like to try and understand better and start exploring, because Artem Yevsky is a multi-billion-dollar, is a billion-dollar company making asset. It's one that's just outside our license, owned by Kaz Minerals, 50 million tons at about 5% copper equivalent. We could have one or two of those on our license, but across the belt there's potentially quite a few of them, and so it'd be very nice to find more than one in time. So that's our principal asset. We've got two other assets, being the Tuili orogenic gold belt, and we were farming into a rare earths license called Telluric. And adding the Tuili belt, we had the most data on, so we drilled that initially. I think we've had great success there. We've demonstrated we've got a deposit with as a more than likely intrusive related gold system on a belt with a number of highly profitable intrusive related gold assets and more than 10 kilometers of strike. So we'd like to go back there. We'd like to get stuck in and do some additional work, subject to funding and finance. But we have a small gold deposit. We think there's a potential to be a big one. So we need to try and understand that a lot better, and that's going to take more drilling. And then the Telluric rare earths one is also incredibly interesting. So geologically, it had a lot of information. It was an old deposit. It looked very much like an ionic clay, and we had Dr. Rainer Elmies as one of the co-founders of the company with me, and he'd be in the top sort of 0.1% of rare earth specialists globally. He's discovered and is building a rare earth mine in Namibia with JOGMEC, the Japanese government investment agency for metals. So he's highly intelligent in that sphere. We spent about $100,000 on that asset, and confirmed the grades, all very interesting. The leach test results, we would have liked to have seen better recoveries from the ionic aspect of it, but nonetheless was very encouraging, and has given us a good indication of how we might undergo exploration in that area going forward. So we just need to risk weight taking all these things forward. So, when you're a junior company with limited capital, you want to advance projects as cheaply as you can, as best you can, and not spend money drilling out a deposit that might not be economic. You collect the data and you risk things accordingly. And for rare earths, one of those things that you do earlier is metallurgy, and then otherwise you might leave it a little bit longer for gold or copper, for instance. And our copper prospect has historically had 97% recoveries from copper just from flotation. So we're not particularly worried about metallurgy in the VMS belt. So I've got it around a bit, but sorry, hopefully that's given you a good picture of where we're at and what we hope to be presenting to the market in the coming months and years.
No, indeed. I think it certainly does. I mean, what about, I just want to touch briefly on Kazakhstan, if I can, and that jurisdiction you talked about, it sort of the regulations changing and it perhaps opening up for mining now. Obviously, you've moved there. You've lived in different countries all your life, but, it is a big thing to move countries. What's it like to operate in? I mean, clearly you feel that there's clearly an opportunity here to actually move your entire family there, to go and, well, hopefully grow this company, make a discovery.
Yeah, I mean, it's fantastic to operate in.
Okay.
It's not perfect. No jurisdiction's perfect. But I would take it any day of the week over. I won't name names, but I mentioned the trouble we had in Sweden and permitting and so on. In a year and a half here in Kazakhstan, we have acquired we started with 4 licenses that have been owned by Talc and Samak and transferred to our joint venture companies. We acquired another 6 licenses. We've farmed into several. We've conducted drill programs in 3 different jurisdictions. We've done heliborne EM survey. We've done IP. I just can't think of a jurisdiction that a small company can achieve that amount of work in the ground. And it's a vast, being able to achieve all that means that the money gets spent very well, because you can do things quickly, so you don't have this slow burn of overheads that you get with other companies that take a lot longer to progress their assets. So for all those reasons, it's fantastic. There's always things we'd like to tweak, and to that end, Eastar and a Canadian company called Aris were 2 of the co-founders of the Kazakhstan Chamber of Mines. And we've had Rio Tinto join, Fortescue Metals Group have approved joining. I think we're just waiting for their paperwork. A lot of other local companies and international companies in the junior space and the mid-tier space are joining, including Turkish companies and so on. So there's maybe about 15, 20 of us at the moment. And that's to advocate for responsible mining and investment in Kazakhstan, and also just to provide a bit of a picture of how greenfields exploration is done in the international sphere, which usually starts off with big licenses and then shrinks smaller as you have success. And there's certain aspects of the mineral law which aren't perfectly designed for that, which make things a little bit slower, a little bit more expensive. So there's always tweaks we'd like to do, but I think I'm happier here than I am in just about any other jurisdiction in the world that I've worked in, and certainly a lot that I haven't. So it's a great place, and it's incredibly safe. My wife can go out for a night out with the girls, catch a taxi home, and has never worried about a thing. It's an incredibly safe jurisdiction for those reasons as well. So it's nice.
Good to hear. Good to hear. I've never been, but I have only heard good things about the country. So maybe it will be a place I have to go and visit one day, maybe when you've got some interesting stuff going on the ground. I do just want to cycle right back to the beginning, just briefly, when you talked about recognizing when companies or CEOs were perhaps BSing you. Surely the market is not full of that. Surely not. But there's definitely an element of story telling, though, isn't there? It's particularly with mining companies, going through that development path. And yeah, there will be a certain amount of spin. It's always a line that, certainly at Stockbox, we've got to make sure that we're being very transparent on that with the CEOs, and because they've got a story to tell. They're effectively selling every time, aren't they? They're selling their company, or it's trying to sell interest in buying shares in the company so they can raise money to go and pursue it. I'd hope there's less bad actors out there, like crooks, let's say. But I mean, you clearly educated yourself because you wanted to make an informed decision off of your own knowledge rather than taking what someone says at face value. So, I mean, how did that really affect you? And I guess in a sense that really does align you now with your shareholders, and hopefully this whole podcast hasn't been you just BSing, but
well,
I just go on.
Yeah, no, it's a good question, and honestly, it actually affected me quite poorly. It pushed me too far the wrong way early on in my career. I assumed that it was everybody, and that's just that obviously that's not true. And again, this is principally to a UK audience, but my analogies are mostly Australian, and I look at companies like Independence Group and like Northern Star and Sandfire, and just wonderful management, just really clever exploration and strategy and execution. I mean, I wrote a very small thesis on Independence Group when I was doing my master's, and I just look at what they did early on, and they had all of these different licenses. They had the diversification. They farmed out their greenstone belt to Anglo early on when it was soil sampling and a concept, and managed to maintain 30% of it, after their farming the whole way through to making hundreds of millions of dollars a year. And now they're at, I don't know what they're at today, $12 billion behemoth in looking at upscaling lithium. I mean, it's absolutely phenomenal. The quality of the people that are coming out of this. But so I went too far the other way. I think I was just in the wrong end of the stick for a little while, and was too, shown too many of the dodgy companies.
Right.
But the goal is to find the good ones, find out what they did, and then model yourself on that. And that's certainly how I picture things. Going forward. Northern Star was a group of like highly qualified underground mining specialists who saw an opportunity and just raised the money, jumped at it, and again just huge success. So you need to figure out what your point of difference is and then use it. But it's that diversified approach, I think. Yeah. So it sent me too far the wrong way for too long. But I'm back in the fold now, and I think that you can sort the wheat from the chaff. And there is still wheat and there is still chaff. Sure. But nonetheless, it's possible to do. and you need to be bullish. I mean, you can't be a junior mining company CEO without being bullish. You can't be an explorer without being bullish, because you'll never drill that hole. You can't be an explorer. You'll never drill that hole, and you don't know until you do. So you have to be a perpetual optimist. You have to risk weight what you do, and you have to apply sensible spending. But nonetheless, you have to be bullish. You have to be excited. And you have to get people to come along for the ride, and hopefully for everyone's sake, that ride is successful. Hopefully for everyone's sake, that's why I'm here. That's why I keep writing checks for the company as well. That's why I'm here. That's why I keep writing checks for the company. Continue to do so as long as I can afford. As long as I can afford to continue to do so.
And if you were to finish off by perhaps, if you could share any lessons you've learned for investors who are listening, who might be deciding what companies to good investments, what companies to perhaps avoid, what would be the things that you've learned? I mean, you've mentioned things like quality of people there and quality of exploration, diversified approach, but any sort of key lessons that you might want to sort of pass on to investors that were a few years ago?
Yeah, I mean, I mentioned the cohort that I built. I can make quick decisions on things sometimes, but I tend not to pull the trigger on it. I mean, I don't pull the trigger on it, both for eStar and any personal investing, without having a highly intelligent group of people that I put out the concept to kind of wargame it. So, I've got my WhatsApp groups that have a metallurgist, mining economists, mining engineers, geologists. I can run it past a lot of people and which not everyone has the privilege of being able to do that. But try not to be emotional about these things. I think everyone knows that. And risk weight your portfolio, because even the best intentions and the most honest people still don't get it right all the time by any stretch in exploration. But if you can, grow your knowledge base, seek information, ask hard questions, to the people in charge, to me, and see what sort of answers you get. And if they feel honest, then that's probably a good start.
Yeah, I think that's quite good advice. Go with your gut, see how they feel. You can usually tell if something seems amiss. Well, thank you very much, Alex, for your time today. We are upon an hour there of the podcast, so thank you very much. Kenny, any final thoughts from you, Kenny?
No, it was great to have you on, Alex, and it's been a pleasure to listen to your journey, and it's amazing how life's journey takes you from various countries. And I bet you never dreamed of 20 years ago ending up in Kazakhstan.
Exactly.
Running a business, but...
Well, thank you very much, Alex. Good to do the podcast with you, and I'm sure we'll be speaking a lot more on Stockbox.
Thanks, gentlemen. Appreciate your time, and apologies for dragging it out so long.
That's all right. Thank you.
All right. Take care. Bye.
Yes. Bye.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. Tune in next time.